What's up, guys and girls? Welcome back to Everyday Money. Today I want to talk to you about real estate because that's one of the places where I put my money other than in total market index funds in the stock market. I usually use that as a very safe and predictable way to grow my wealth and have just a core investment that I know is probably going to do very well, that I can have a nice foundation on. But real estate is where I have kind of rolled the dice more often and gone for much bigger returns than I'm ever going to be able to get on an annual basis in the stock market. And that's one of the big draws of real estate, are big returns in a short amount of time. But a lot of the videos that you see on YouTube and on TikTok or anywhere in the internet sphere, a lot of times they're crazy. They'll be like, all you got to do is take your $100 or $200 or $500,000 and then you make 5 mortgages at 20% down. You take $20,000, put it on each one of those homes, and now you control 5 homes at $100,000 each. You got $500,000 in real estate, or they'll be like, when you do your first 32 unit deal and you put down 5%, you syndicate that with 16 other investors and you raise $3.2 million. And a lot of people just aren't at that level, and they may not ever want to be at that level. They might just want a real estate investment to grow their wealth on the side to the tune of, tens or $100,000 or $200,000, or they might be looking for some cash flow to augment their regular jobs or to invest, because you can invest your cash flow from your passive investments in real estate into other passive investments like total market funds like I do, and that just creates this like wealth building avalanche, and it's crazy how fast the money can really accumulate and grow in size. But a lot of you guys out there are not going to be doing these gigantic deals, or a lot of the real estate investing advice out there is just garbage. Like the one where if you have $100,000, you make 5 deals at 20% down. First of all, that $20,000 for each one of those down payments is going to take up the entire $100,000, not including closing costs or fees or anything. But that is, I made a short on that a while ago that did pretty well because it's just ridiculous. So I wanted to show you guys today a deal that I did that goes back to 2015, and it's something that any regular investor like myself, and I'm sure a lot of you guys out there, are able to do. It's very easy to wrap your head around, but I made 1,000% return on my down payment money over the course of about 5.5 years. So the long story short is that in 2015, we purchased a building for $80,000 that over the course of about 5.5 years grossed us about $250,000, with about $200,000 of that being net profit. We only put down about $20,000 on the deal, and therefore it was about a 1,000% return on our initial investment. Just about the same amount of percentage that it is for smashing the like button for the YouTube algorithm while we get into the deeper numbers, so that you can see how we did this and how it's probably very feasible for you to do it too. So what we did is in 2015, we found a 3-unit apartment building. It had a 2-bedroom, and a 1-bedroom, all on their own floors, all 1-bath units. They were all very spacious and just really nice place, like all hardwood floors, very tall ceilings, all brick building. It was just a pretty solid building as far as like the bones and the structure of it goes. We came to an agreement on $80,000. We ended up putting 25% down for a $20,000 down payment at 4.75%, which was an excellent rate at the time, over 30 years, giving us a mortgage payment somewhere around $550 a month by the time taxes and insurance was considered. Although the bones of the building were in good shape and I really liked the way that it looked and the architecture of it was really cool, it was managed, and the tenants were in pretty bad shape. It was pretty terribly managed and it needed some updating. We purchased the building with all of the units filled with tenants, which sometimes I look at as a red flag, because if an owner has a building that's filled with tenants and is performing and is not causing them any problems, then why would they want to get out of the building? But nonetheless, we purchased the building with all the tenants in it. Two out of the three sets of tenants that we had were absolutely terrible. Tons of late rent issues with them. Police were visiting the building regularly for these two sets of tenants, and in the area that I'm in, if you get the police called to your buildings too many times, you end up getting fees that are progressively worse and worse. The building needed just updates in certain areas, as you know, especially the major areas like kitchens and bathrooms and things. And the rents were all significantly under market to the tune of, you know, $150, $200 under market. Now, we ended up having headaches with this building from day one. And we ended up evicting the two tenants that we had, you know, a lot of problems with. Now, that caused its own set of problems. One, once we got the eviction order, they just were like, okay, you win, I'm out of here. The other set of tenants did a bunch of damage to the unit. They ended up essentially emptying their refrigerator. They threw salsa all over the walls. They put raw meat, like 1 pound meat containers up into the drop ceilings. They put some in they took the furnace covers off, put them in the furnaces. They, I believe, were like professional tenants and knew what they were doing. It took us all the way to getting a set out order from the local sheriff before they were out of the building and we could get in there and repair things. And we didn't find stuff for a while until things started smelling really bad. But those were our two major problems with that. The other tenants were fine. They were good folks. They were just constantly behind on their rent. And so we would post pay or quit notices, and they would always end up paying before we had to take them to eviction court, because that is the last thing that we want to do. One, because we're not really crazy about kicking people out of their homes and leaving them with no place to go. And then two, it's just a pain in the butt, and it costs a lot of money, and it's just not great for anyone. But they were always able to make their rent prior to us having to take them to eviction court, and they ended up paying a lot of late fees. But it's just a lot of hassle on our part, and I'm sure it's a lot of pressure on them, and it just wasn't a great situation. However, after we had the really problematic tenants removed from the building, things really started to look up, and we had less and less headaches over time. As folks moved out of the building, we remodeled kitchens, we remodeled bathrooms, we typically did a total gut remodel on these things, new cabinets, new countertops, new vanities, toilets, shower surrounds, things like that. We got everything rented to market rates, and our other tenants that were constantly late on their rent, they ended up being able to find their very own home, and we got other people in there, and everyone paid their rent on time electronically. There was no reason for us to hardly ever go down there unless there was a problem. Really, in the course of a year, we might get a call from someone once or twice for some sort of issue that was easily remedied by just calling a contractor and having them fix it. After that, it was a much easier process, and this was our third rental building, so it wasn't like any of these things were brand new to us, but it was just a lot of headaches in the first 6 months to a year. So on to the dollars and cents of things, which is probably what most people are interested in. In general, over the course of us owning this building, we collected about $2,000 a month in rent. Now, obviously, when we first had the thing, the rents were under that, and then we collected even less because people weren't paying their rents, and then there was not non-payment while the eviction process played out, which in the greater Cincinnati area is actually not that big a deal, very landlord-friendly area, and you can usually get somebody out of a non-payment situation in about 6 weeks if you follow the rules down to the wire and are up on all your filing dates and such like that. Then towards the end of our ownership of the building, we were just a little bit over $2,000 a month, and we had actually gotten a little bit behind on rents because we wanted to keep people in their apartments and reduce turnover versus having the rents as high as physically possible. Also, when COVID hit towards the end of 2019, the beginning of 2020, we didn't do any rent increases at all, and all of our tenants continued to pay the rent, and so we felt like that was a fair deal for everyone considering the circumstances that was going on. After all of our rents, during the entire period that we held this, after any security deposits withheld, late fees that were assessed to any of the tenants, we ended up grossing about $109,000 in rental income altogether. Now, we incurred about $50,000 worth of expenses over the years, and that would include anything from utilities to repairs on the building, to improvements on the building, taxes, insurance, any type of expense that we would occur anytime is included in that $50,000. And this brings up another great point, is that the 50-50 rule that a lot of people talk about on the internet, and people say, well, I don't foresee having expenses. Because I have a new building or whatever. I won't have to put a roof on. I won't have to put HVAC units in. Never in the course of this building did we ever put a major repair or improvement onto something that's like a capital expense item, like a roof, an HVAC unit, windows or anything. And in the end, we still were almost at 50% of our gross income going out to expenses. So I think that 50-50 rule is a very solid estimation of what you can expect to pay in expenses versus gross income. Then we had mortgage payments with us only holding it for 5 years out of 30. We didn't make a whole lot of principal payments to the mortgage, and we paid off about $5,000 of the note. And so I know what you're thinking here. You're thinking, well, he's only at about $114,000 with the gross rental income and the note pay down, and minus about the $50,000, he's at about 160. The biggest payoff that we got, the biggest amount of profit, was when we sold the building. And this has been consistent for me throughout my real estate investing career. We've had 2 single-family houses. They each made the most money that they made when we sold them, because they had went up in value, we had improved them, and we had made them into performing assets that were renting typically at the top of their rent for the area that they were in. So we went to sell this because we wanted to take this money and put it into another type of real estate asset that I'll get to here in a minute. We listed the building for $235,000 because, just like the rest of the country, since 2015, the real estate value in the greater Cincinnati area has went through the roof. I mean, you talk about to the moon, that is real estate prices right now. That is real estate prices countrywide, including in the greater Cincinnati area. We got under contract at $214,000, but because of the way the rules are on appraisals, we could only get the building to appraise for $200,000, even though there were some comps that were very close to that 214 mark, but they were outside of the radius that they were allowed to use for appraising this building. So we just said, that's cool. We'll settle at $200,000. There were several items on the inspection that we ended up taking care of. Basically anything that wasn't obvious during any type of walkthrough. So these are like utility type of stuff, electric, HVAC, plumbing, roofing type of things that we patched up, and that didn't amount to much money whatsoever. So once we settled the building, we received a check for about $130,000 of gross proceeds from the sale. Now, if you minus the $20,000 that we put down on the down payment, you're looking at about a $110,000 profit on this building over those 5 years. So our total net for the entire building, including rents, late fees, security deposits withheld, the proceeds from the sale, and then deducting expenses, we're looking at a net total of about $193,000 from an $80,000 building that we put $20,000 on in 2015 to the sale in early 2021. So I think that goes to show that with a little bit of money and a lot of hard work in the early part of owning it, that you can go out and do a real estate deal like this, and it's very doable if you just break down the main goal, this big, over here you want to have this performing asset, and then you just break it down into the steps to get you there, from saving up the down payment to looking for properties to searching for a lender, getting it, doing some rehab. Now, we did a lot of the rehab work ourselves. We put a lot of sweat equity into this property, and it paid off in the end, because now we can take that money and we are going to try to move that to the Gatlinburg Pigeon Forge area with short-term rentals, where the real estate prices are high as a kite right now, but the demand is super high and the overnight rental rates are also very high, to the point where, you know, $200 a night is not at all out of the question. Now, if you want to see more about that, because I'm going to be documenting all of my exploration into Gatlinburg Pigeon Forge cabin short-term rentals through Airbnb and VRBO, be sure to subscribe to this channel. That way you'll be able to see that in the future, and you can see if that's going to work out for us or not. But for just this right here, I think that this is a solid example of an actionable real estate investment that the average person can get into, where you're not having to come up with a syndicated deal or hundreds of thousands of dollars down, or just one of the other crazy things that you see on YouTube from these gurus and TikTok and Instagram. So I hope that this helps you out. I hope that if you're interested in investing in real estate, that this is a reasonable thing that you can say, okay, I can do that. This isn't some crazy situation. If you guys like this video, be sure to hit the like button for me. If you haven't subscribed yet, hit that subscribe button down there to grow your wealth, increase your success, put you on the road to financial freedom, and see how things go in the Gatlinburg Pigeon Forge area. I appreciate you guys watching today, and I'll see you